Sanlam Investment Management is one of South Africa's largest asset management companies with 347 billion rand under management. I caught up with the group's award-winning portfolio manager, Kokkie Kooyman from Sanlam Investment Management Global, and asked him if investment opportunities in emerging markets are a viable option.
There's a lot of growth in emerging markets, and developed markets are down on the backside. I mean, there's a lot of problems in Europe, even in the US, Japan. But what investing is about is valuations. So the problem you've got growth on the one hand and no growth on the other hand, but the valuations in developed markets are extremely attractive. And emerging markets, a lot of them are expensive. So at the moment, I wouldn't say you must go for emerging markets. You must just go for where you can find value.
What about this risk-off trade that we're seeing right now? Obviously, Greece has got the markets in jitters again. Won't we see opportunities unveil themselves?
No, absolutely. It's interesting, even in emerging markets, as soon as it's risk-off, you find all emerging market currencies fall, like the rand is now coming down again, and emerging markets come down as well. So interesting, you get opportunities in both at the moment. When there's risk-off, then Europe falls and emerging markets fall. But I think longer term, depends on your horizon, longer term countries like Korea, India, Turkey have huge growth and going to do very well, but short term they're expensive relative to what you can get in Europe.
I was speaking to a couple of fund managers earlier, and they were saying that the Greek exit from the Eurozone is already priced into the market. Is it?
I think it is. I think most professionals in the market are already expecting it, but it's more the uncertainty as to the effects it will have that just keep the market on tenterhooks. I would almost agree with you and say that the day that it's announced that Greece has left, we wake up Monday morning and say they've had a bank holiday, everything is closed and Greece is out, the markets will go up. But until people know exactly how it's going to happen, the uncertainty is there, and that's really what's keeping the market worried.
Uncertainty is going to drive markets lower across the board.
But what's worrying the markets more is Spain. It's just, Greece is almost factored in. It's just Spain. Spain's debt level is so big and increasing as just how is Europe going to bail out Spain? And I think that's a bigger worry.
A key barometer for you then is obviously the Spanish bond yield right now.
Yeah, we're just going up the whole time.
Where should we really take cognizance? I mean, is it alarm bells right now in terms of the Spanish bond yield?
If it stays above 6%, because that's normally your level where as soon as it goes above that, then you know you're in a debt trap. And secondly, the unemployment rate in Spain is still rising, and the banks had to be recapitalized again. They now again have to do another recapitalization, and your properties are still falling, and there are no buyers.
What is the worst case scenario here, Kokkie? Is it a very bleak outlook?
Yes, the absolute worst case is that the Spanish population also strike and go mad and want to follow Greece and leave the euro as well. Then you've got a big problem, because then the euro sort of is a bit in tatters. I think what Europe will try and do is keep Spain in long enough so that the Spaniards can see how bad it's going to be for the Greeks when they leave the euro, because it is going to affect Greece badly, and that the Spaniards will try and stay in. So, and I think what will happen internationally, China, Japan, and everybody else will come together and say, guys, we can't let this happen, and put together a mega fund. But they're going to wait first for it to get worse. So the next few months could actually be quite tense.
What are you pricing in? A breakup of the Eurozone in totality?
No, I'm pricing in Greece leaving, possibly even Portugal. But I think the rest of Europe, there is the cost of it breaking up is just too big. It's just too big.
And then, Kokkie, I also need to get your thoughts on the US. We've obviously seen some relatively concerning data on the employment front. Does it mean that the US is headed for trouble?
Yeah, the US has had quite a nice run. Unemployment has improved, it seems. And your stock levels were low. Look, I've just spent 2 weeks there, and confidence levels are fairly high. So I think the US has recovered enough not to go into a bad recession, so they'll mumble through. But a worrying statistic that nobody focuses on is that percentage of people employed of the total population is still going down. And what the unemployment ratio doesn't show is people who give up looking for jobs. So there's an increasing number of people who just don't look for jobs anymore. And so the unemployment improvement is actually a false number. And that's what guys are more worried about. But our sense is, from all the interviews we've had with a lot of bank managements, the three things that have happened: the bad debt has largely been solved on the banking system, house prices are very low and starting to recover, and the banks have been recapitalized. So at least the US is in a position, if it deteriorates, they're healthier.
So if the US deteriorates, they are in a position where they are healthier. So they're going to get through that.
The problem in the US now is government debt. It's not private debt anymore. That's out of the system. And the US is okay. I mean, believe me, whenever you start talking detailed statistics and how you calculate the unemployment rate, your eyes just glaze over. But as long as they are creating jobs, it means things are getting better despite any other statistic.